Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday, the 23rd. Great to see everybody. I hope that you guys have had a chance, by the way, if you haven't already, had a chance to register for tonight's webinar. I think that it's going to be a great follow-up to the conversation that we had last Wednesday, which was focused on indices and touching a little bit on ETFs. So we're going to dive a little bit more into how I day trade ETF options, stock options, and even sometimes how I enter the underlying stock or ETF. So we'll be having that today at 8 p.m. Eastern, New York time. So I'll see you guys there. In the meanwhile, great to see everybody. Let's see what we have here. Let's kick off the morning with, hey there, Alex. How are you? Okay, so question is, let's get this daily time frame up here. Let's see. Let's open this one up. All right. So question is, good morning, Alex. Thoughts on Dropbox, DG boat in a DG tide. All right. So love it, love it, love it, love it. DG, by the way, for those of you, double green. So, so if we're looking at a double green, or just another way to automate the understanding of four exponential moving averages, 8, 13, 21, 34. I think I was talking about this in one of the rooms yesterday. And, as I progress in my career, it's not about more or even new indicators. It's about how do I make the ones that I'm using now easier to read, automate the signals, automate the analysis. And that's, definitely the progression. Double green is just an extension of how am I interpreting the structure of the grab candles and the moving averages and propulsion dots. How do we make that, almost traffic light simple, and that's definitely what that double green is designed to do. So DBX, beautiful uptrend, 21 propulsion dots lit up. So the 21 EMA is most definitely in play. Got a Darvis up there. Now, it's interesting if Nicholas Darvis were to look at this, he would be counting how long it takes to break through that level for continuation. But what's really interesting is if you modernize the Darvis, you take a slightly different tack on what it is that you're looking at within the confines of that box. This area is really interesting as well, meaning we have this support level sitting at the lower end of this range that within the context of a double green, as you can tell by that little green arrow right there, becomes an actionable thing, because it becomes an actionable level for us to say, well, what's the path of least resistance? And I love that you mentioned the double green tide. So yeah, absolutely. So if you think about, what are the other stocks that Dropbox is hanging out with? What is the general gist of their direction? And also, where are we within that time horizon from today to earnings? And a lot of you will probably know, we're gearing up for earnings again, right? So we have our 6-4-2 window. Now, yeah, the 4 is sort of the middle ground of where I really would like to see a market in double green. 6 just so denotes how many weeks out I start scanning for double green. So 6 weeks out, I'd like to start seeing the double green, but 4 weeks out, I still want it to be double green, and I won't enter an earnings trade, or at least I tried to minimize it inside of 2 weeks. So this is sort of the yield, if you will, right? So I don't really want to be actively pursuing the pre-earning stocks inside of that heightened implied volatility window. So that also brings up, can we start thinking about running to earnings a little further out than necessary, but great one to keep on the radar. And by the way, if the 642 is something that you'd like to know more about, it's pretty much as simple as it sounds. But if you head on over to countdowntrader.com, and I think you go, if I recall, it's maybe the 5th page, get down to the very bottom of the blog and head on over to 5th page, I think. But you'll find there are a couple updates on the 642. It might be actually pushed out to the 6th page now. There it is, sixth page, page number 6. And you'll see the 642 window approach, and it's completely described what I'm looking for, double green, how many weeks out, and then what I'm looking to do, which is simply buy pullbacks. All right, so thank you for that. And again, as we start going through some of these stocks now here in mid to late June, we've got to start thinking ahead about those potential earnings trends that we could take advantage of. So that's definitely going to be one extra thing that will add to our analysis, which is that time factor, right? So thanks so much for the question. Thanks, Alex. Next up is PH. All right, so ranges on the indices look tight yesterday. Do I expect them to continue this week? So that brings up, so last night, and I do this every night or every morning, I just decided to do it last night, and that is I look at the previous session. So what I think is the highest probability direction for the market, continuation, stalling, I'd be cautious. I look for 6 different things. It used to be close to 8 or 9. But I sort of whittled it down to 6. It could be as few as 4. Actually, it could be as few as 2. Just depends on how much time you want to spend on the daily. And to me, they're very simple things to look at. But this candle right here, yesterday's candle, for me holds a lot of the key to what lines in the sand, what thresholds, what levels, and how likely we are to continue in the upward direction. And this has to be done individually on each index. Like I'm not going to, for example, I am not going to simply look at the NAS and say, well, the markets are going to go up. Because what are the markets? Which part of the market? Are we talking currency markets, indices, treasuries, energies? We want to be really specific, especially this year. Last year, and I think I've talked about this a few times, it was really easy to fall into the verbiage of the markets because just everything was going up. This year, it's really important to remember that we need to be much more segmented, much more compartmentalized, and realize that certain indices are going to look very different than others. Certain sectors are going to look very different than others. I am bearish the Dow. I've got to be. When I run the process of the 6 things and I look at the underlying, and you guys know some of these already. I've shared some of these with you all. Look at my JT multi. Look at my grab candles. All right. Look at where we are in respect to the wave. Right? These are some basic things. And there's a few more things that I look for. Just crunch some numbers and say, what's the probability? Where are the lines in the sand for the progress that the market can make to the upside, and what are the obstacles, and the progress the market can make to the downside, and where are the obstacles? So I think the most important thing is to remember that I can't just look at the NAS and paint the entire market with that brush. I can't just look at the Dow and paint that market with that brush, especially since the reflation trade has been, annihilated for right now. It really, really took it. I mean, the reflation trade, I'd say maybe took a knee, but no, it took an 8 count. Will it be back? Well, there's certain segments of the market that it is. And if you haven't checked out yesterday's free video, it's on the Simpler Trading YouTube channel that you're likely on right now. And all of the free videos that I do for the Simpler Futures, they're not always going to be, what's going on with corn, right? It's not always going to be that. But give me one moment here. But what you can do is check the Simpler Trading YouTube channel and go back. I think it was yesterday's update where we broke down which 3 trends, which include some of the stock trends, and are going to influence certain stocks as well. But which 3 trends right now do I have my eye on? And check that video out. I went into a lot of detail about it in yesterday's free video. But needless to say, crude is one of them. If I like crude, I'll be looking at RBOB gasoline. I'll be looking also at natural gas. Now, some of you might say, oh, but Rog, I don't trade futures. Maybe I day trade them, but I may not swing or overnight trade them. No problem. Remember, you do have ETF alternatives. And even a lot of the folks in the futures room say, Rog, to take the QQQ overnight, Who wants to pony up the 69 that you need to take a NQ futures trade overnight? The initial margin is really, for a lot of traders, cost prohibitive for even one, forget multiple. Micros are cool, 1/10 the size. So are options on the NQ and options on the QQQ. So probably one of the more popular ways that our traders will take advantage of my longer term trend follows are with the ETF alternative options. So, keep that in mind. And when it comes to crude oil, you've got USO. And if you check that video out, you'll see why I'm excited about things in OIH and XOP and even XLE, despite the fact that we saw so many of the commodities really get hit hard with the slight tweak of the messaging from Chair Powell, Powell, as I like to call him. You'll see that this corner of the market fared actually really well. So I think ultimately, when I look at the indexes, right, which one do I think has a probability of moving higher? NASDAQ, S&P, probability of potentially moving lower or chopping, Dow, and I haven't been playing small cap. But then if you think about what's inside the indices, crack it open, you'll see financials and healthcare and communications and tech. And that's really where I think the success in the market this year has been best, and where you want to continue to be that specific. Broader indices are super tough. Hey there, Nige, News Australia. Great. Thanks for tuning in. It's got to be 9:30, not quarter after 9. What is it, 12 hours or more? But yeah, good evening. Good evening. Thanks for joining us. All right, next up is R8 Pilot. Good morning. Would I look at, CRSP? Sure. And for a new long position, and let's see, debit spread with July 16. All right, so the first thing is, if I'm going to take a look at CRSP, just basics, do I like something with 23 days to expiration and sort of sporadic liquidity? We don't have a lot of choice here because August is really thin too. So first of all, it's going to be a little sporadic in terms of liquidity. The day to build the position. Now, again, I think the issue with CRSP, and I'm just looking at the option chain here to my left, the issue with CRSP is going to be, I want to play the 125s, if not the 124, 123s. You'll notice the liquidity down there is very slow. The 130, which is, to me, kind of where we are right now, out of the money, nowhere near my buy zone. See, my buy zone is going to dictate what strike I buy, and my buy zone is lower than where we are now, meaning we need to trade lower into this area in here, ideally before I'm a buyer. And then I'll look at an at the money call. And I don't want 23 days only to expiration because, unless I'm trying to take advantage of collecting credit. Now, remember, very little time to expiration if you're playing directionally in a debit. Very little time to expiration means directionally that trade has got to work. It's got to get working right away because you're already inside that theta decay window. If you're looking at a credit spread, less time is, obviously something that a lot of traders look for. But remember that you're also going to collect less. Now, I know you want to do a debit spread. So for debit spreads, where you want to offset some of the cost, usually the line in the sand for me as to when I believe I want to go with a debit spread is based on risk. Why would I want to offset the potential cost of a trade? Because that's all a debit spread really is. It's not tactical in terms of the risk side of our risk reward balance. It's really only tactical to the, it's not tactical to the reward side of our balance. It's not a reward oriented approach. It's a risk oriented, which is clearly okay. But when I'm looking at risk reward, I'm sort of saying, you know what, I'll forego some potential upside to lower my cost basis or, cover my cost basis in such a way that I'm risking less for the trade. So I'm cool with debit spreads, but I'm going to leg into them. So every debit spread for me just starts like, for me, just a vanilla, very pedestrian long call, which is what I do 90+% of the time because I do day trade options. And a lot of folks have asked me, Rog, how do you kind of day trade with the frequency that you're talking about? And I'll talk about that tonight. It's a very simple thing that I do, and it allows me to compartmentalize, again, my approach very, very nicely. But one of the things that I'll do intraday or end of day, although I don't do intraday debit spreads very often, but one thing that I'll do is I'll leg into these. I won't buy the call on the same day that I'm collecting credit, because think about it this way. There's no way that both are ideal on the same day. So I don't have a problem with the debit spread. I have more problem with the liquidity, and CRSP is basically going to be in many ways tethered to the Cathie Wood narrative. No? So I would definitely see where it is within actually my favorite arc. This is probably of all the arcs, this is the one that I have the largest position in, and that's the arc G. I'm not as fascinated with the overabundance of Tesla and all the other arcs. I have arc positions K and F, but my largest arc is actually the G, and that's what leads us from CRSP to arc G. So it's probably going to move a lot like arc G, and it certainly has attention and structure in its own right, no doubt. But that's the way I'll look at it. So if I am going to do a debit spread, I'll leg in. But remember, what does this thing have going for it? A handful of grab candles. We are above the 200 EMA. I do like that. So, all right, yeah, I don't have a problem with the actual stock. I have probably a larger issue with the illiquidity and the lack of time. And never underestimate. Look, it's hard enough to pick direction. It's hard enough to pick the right zone. It's hard enough to make sure you're not overpaying for the option. Then we're putting a fourth hoop that's now, in flames, like the poor little dog at the circus. Now we're having to jump through the flaming hoop of wow, will my trade idea trigger in this particular amount of time? And in this case, it's very little. And so that's probably my bigger issue. That's probably my bigger issue with it. But overall, I'll just look at this longer term and grab some ARC G. Speaking of ARCs, ARC K, sure. Realize, and I'm a fan, right? I'm a fan of a lot of folks that probably are having some rough years. I mean, you look at, say, I was looking at, say, Jim Simons and what was happening, not with the Renaissance Medallion, but the other funds that lost, 20 to 30% last year. How do you lose money last year? And then you look at, say, Cathie Wood this year. Even the greats have off years. But I think when it comes to ARC K or ARC, any of the other ARCs other than G, you look at just how much of a high concentration weighted bet on certain themes and symbols that the folks of ARC have chose to deploy. That's troubling to me. Last year wasn't necessarily, again, hear me out. I'm not saying it wasn't great trading, but it was a high concentration bet and a stock that went absolutely parabolic for a good chunk of the year, meaning Tesla. So for ARC now, what's gonna drive that? It's not going to be Tesla, at least not right now. And Tesla can't get re-added to the S&P, which is a big deal. That was why it went as parabolic as it did, a huge reason for it. And it's not going to split again. So think about two of the main catalysts for Tesla and two of the main catalysts for ARC. Again, it's going to be a little bit more sedate. And I think that if we pull some of these ARCs on weeklies and elongate our time horizon and respect what Cathie Wood has always been very upfront about, her time horizon's 5 years. She's looking at 5-year blocks. She's looking about 15% per year. And I think the only way for me to look at ARCs is as an investor. It's not going to have a 2020 anytime soon unless one of the individual concentrated bets goes absolutely parabolic. So to me, my favorite way to play ARCs is longer term. Respect the person who's managing. Clearly, she's a brilliant woman, and give the time horizon that she's laid out for us. I mean, who could be more transparent than ARK? Use that time horizon. And to me, I'll buy the underlying on the pullbacks, which I have done. And I'm happy to have a recent cost basis around 106, somewhere in there, recently in ARK based on those weeklies. I don't mind that at all. Okay. All right. So that's my take on ARK. I don't want to look at it to trade. I want to look at it for the longer term. All right. With that, I know I've run over. So thanks as always for joining me for Charts and Coffee. If you're a member of the Sector Secrets crew, I am heading on over to the chat room there. Right now, we're going to have our monthly live trading session here, and I will see you all there shortly. I will see you all in the options room for the close. We can keep the conversation going then, and I hope to see all of you at 8 p.m. tonight for our webinar talking about the short-term time frame approaches that I will be absolutely deploying throughout summer, that I do all year long. It's an all-season approach, but most definitely since what's happened with the market shakeup last Wednesday, it makes so much sense to shorten the time frames and get nimble. We'll talk about that tonight at 8 p.m. Eastern. And until then, have a great day. Heads up on the calendar. We do have Fed members speaking every day this week, except for Friday. And I'll see you tomorrow. Be good to each other.